Hey everyone, welcome back to the AI Tech channel. Today, we're diving into a stock that's been making headlines for all the wrong reasons, or maybe all the right reasons depending on who you ask. Palantir. It's up over 250% this year, leaving many investors wondering, is this the next big thing, or is it a bubble about to burst? The big question is, should you be buying, selling, or holding? And what are the secret forces driving this insane rally? Let's get into it. Palantir Technologies, the AI software maker, has seen its stock price skyrocket, especially after its recent earnings beat. And let's not forget the potential impact of the upcoming election. Some analysts believe that a certain candidate's victory could further fuel Palantir's growth, given their existing ties. But is this optimism justified, or is the market getting ahead of itself? The stock was slightly lower in early trading Thursday. We'll get into the political connections later. But first, let's look at the fundamentals, or lack thereof, according to some. Now, here's where things get interesting and a little scary. Palantir's valuation is, shall we say, ambitious. It's trading at around 135 times forward earnings. That's a massive premium compared to the Nasdaq 100 index average of about 27 times. It's also the most expensive stock in the S&P 500 based on enterprise value to revenue. Some analysts are waving red flags, saying the stock has simply gone too far, too fast. It appears that some are starting to think that this party is about to end. We've already seen two analysts downgrade Palantir in the past week, citing its unsustainable valuation. Jefferies analyst Brent Thill, for example, says that Palantir would need to accelerate sales growth to an insane 40% for 4 straight years and trade at 12 times its estimated 2028 revenue, just to maintain its current stock price. He calls this unlikely. Consensus estimates, by the way, are for 26% growth this year and 24% the following year. That's good, but is it good enough to justify this valuation? Thill cut the stock to underperform. Argus Research analyst Joseph Bonner echoed this sentiment. He wrote that Palantir shares, which have tripled in value this year, may be getting ahead of what the company fundamentals can support. He also cut the stock to hold. Bonner raises a crucial point. Palantir specializes in catering to a small segment of organizations with highly complex IT challenges. This could lead to uneven results that the market tends to punish in highly valued tech stocks. Think about it. They're not selling to every small business. They're selling to governments and large corporations with very specific needs. This means their sales cycle can be longer and their revenue more lumpy. This is not a set-it-and-forget-it type of business. Wall Street's overall sentiment towards Palantir is definitely mixed. Of the 20 firms covering the company, half have hold or equivalent ratings, while only 3 rated a buy and a whopping 7 recommend selling. The average target price implies a 39% downside. That's a huge gap with current trading. What's going on here? It's possible that Palantir's strong retail investor base, who are among its biggest supporters, is driving the price higher, irrespective of what the experts think. Here's another sign that some think the rally has gone too far. Short sellers betting against Palantir have lost over $3.6 billion on paper this year as the stock surged. Ouch. But they're not giving up. They're actually doubling down on their bets, with short interest as a percentage of Palantir's float rising from 2.8% in early September to 4.6% this week, according to data from S3 Partners LLC. This is a high-stakes game of chicken, and someone's going to lose big. Now, let's talk about the political angle. Trump's potential election victory has given Palantir bulls a new reason for optimism. The company gets more than half of its revenue from government contracts. D.A. Davidson's Gil Luria points out that Palantir benefits from close ties with Trump, given that CEO Alex Karp, co-founder Joe Lonsdale, and Chairman Peter Thiel are all very well connected with the administration. It has been suggested that they are all very well networked. Luria believes that Palantir's vision is congruent with the ideology of Trump and his administration, particularly regarding a clarity of vision around only selling to Western countries. He even calls Palantir the flag bearer for patriotic U.S. businesses. Wedbush Securities analyst Dan Ives, a longtime Palantir bull, thinks the company will be able to win more government contracts in an AI push by the new administration. This is a significant factor that could influence Palantir's future trajectory. Ives expects major AI initiatives within the U.S. government, including the Department of Defense, which would be a major tailwind for Palantir. The challenge for investors is that even Ives' street-high $57 price target has been eclipsed in the past week, underlining the speed and magnitude of Palantir's latest rally. It's becoming increasingly difficult to call the top. So, what do we do with all this information? Let's break it down. Palantir specializes in data integration and analysis, helping organizations make sense of vast amounts of information. Think of it as a superpowered data detective. Their Gotham platform is used by government agencies for national security purposes, while their Foundry platform is used by commercial clients to improve operations and decision-making. While their tech is impressive, it is not magic. It requires significant human oversight and customization, which adds to the cost. A key technology Palantir uses is machine learning. Machine learning algorithms allow their platforms to identify patterns, predict outcomes, and automate tasks. For instance, they might use machine learning to predict equipment failures in a factory or to identify potential fraud in financial transactions. But machine learning is only as good as the data it's trained on. Biased or incomplete data can lead to inaccurate or even harmful results. This is a critical point to keep in mind. Palantir also leverages network analysis to understand relationships between entities. This is particularly useful in identifying criminal networks or tracking the spread of diseases. By visualizing these connections, analysts can gain insights that would be difficult to obtain otherwise. However, network analysis can also raise privacy concerns, as it involves collecting and analyzing data on individuals and their interactions. It's a powerful tool, but it must be used responsibly. Now, let's consider the contrarian view. What if Palantir's growth isn't sustainable? What if the government contracts dry up after the election? What if their commercial clients find cheaper or better alternatives? According to a paper published in the Journal of Financial Economics, companies with extremely high valuations often experience significant corrections, especially when their growth fails to meet expectations. This is a risk that investors need to be aware of. We are talking about the paper that examines the long-term performance of IPOs with high valuations. On the other hand, what if Palantir's growth accelerates even further? What if they become the dominant player in the AI-powered data analytics market? What if their technology is truly revolutionary and indispensable? Some argue that Palantir is still in its early stages and that its long-term potential is enormous. They point to the increasing demand for AI solutions across various industries and the company's strong track record of innovation. They may be right, but that is not always enough. So, how do we reconcile these conflicting views? One approach is to focus on valuation metrics. Is Palantir's current valuation justified by its growth prospects? Another approach is to assess the company's competitive advantages. Does Palantir have a sustainable edge over its rivals? A third approach is to monitor key performance indicators, such as revenue growth, customer retention, and profitability. By carefully analyzing these factors, investors can make more informed decisions. Let's address the elephant in the room: the political risk. Palantir's close ties to a particular political party could be a double-edged sword. If that party loses power, Palantir's government contracts could be at risk. However, some argue that Palantir's technology is so valuable that it would be difficult for any administration to ignore. The company's work in national security and defense is considered essential by many. But still, political risk is a real factor that investors need to consider. It is also worth considering that the previous administration was not as kind to the company as some expect the new one to be. So, what's the bottom line? What should investors do with Palantir stock? If you're a long-term investor with a high risk tolerance, you might consider holding onto your shares, but be prepared for volatility. If you're a short-term trader, you might try to capitalize on the stock's price swings, but be careful not to get caught in a trap. And if you're on the sidelines, you might want to wait for a pullback before jumping in. No matter what you do, remember to do your own research and consult with a financial advisor. In conclusion, Palantir stock is a high-risk, high-reward investment. Its valuation is stretched, its growth prospects are uncertain, and its political connections add another layer of complexity. However, the company also has a strong technology, a loyal customer base, and a significant opportunity to capitalize on the growing demand for AI solutions. The future of Palantir is far from certain, but one thing is clear: it's a stock that's worth watching closely. What do you think? Is Palantir a buy, sell, or hold? Let me know in the comments below. And don't forget to like and subscribe for more AI tech news and analysis.